that means this cycle could be the last cycle. There is this point of no return, or this event horizon, because of how much value Bitcoin is accruing and how quickly, how much adoption it's getting. Eventually people just want to abandon the dollar, and it's like, it's worthless because everybody's using Bitcoin.
All good. You ready to go?
Ready to go.
Great. So, Pierre, how you doing?
Very well, Matt. Thanks for having me on.
No, of course. It's nice to have you here. We met up briefly at Bitcoin Amsterdam and got talking about all things Bitcoin and mining and everything. So I was really keen to have you on, especially having followed you for a few years. You're one of the true crypto Twitter OGs, I feel like. So yeah, it's a real privilege to be able to sit here and chat to you and hopefully have some cool insights from yourself regarding Bitcoin, mining, the US, pretty much everything. Hopefully we can touch base on a lot of stuff. But one thing I wanted to start off with, obviously I mentioned you're pretty much a crypto Twitter OG, not just Twitter, but being in the space, writing articles that, go back probably 10 years now. I wanted to know kind of how you first got into Bitcoin and how Bitcoin as an asset, as the narrative surrounding Bitcoin, how social media and everything like that has kind of changed in the years that you've been in the space.
Yeah, absolutely. That's a great question on the social media side, because it's been pretty prominent for Bitcoin. I originally got into Bitcoin. I think the social media at the time that I was really focused on was called Slashdot, and it was like a blog news website for technology. It was kind of like Hacker News. That's something that people use today. But in any case, that got me reading about the Silk Road and reading about Bitcoin mining. And this is back, I think, in 2011. But, it was like, there was like a Wired article about it. And it wasn't something that struck me as being aligned with my economic interests, which were really into Austrian economics and sound money. So at that time, I was into gold and silver as kind of being the future of money. I was like a Peter Schiff, Yeah. But when I heard about Bitcoin in this context, I thought it was like World of Warcraft gold, right? Like there's no scarcity of it, but it's interesting because it's like electronic cash, but it's not sound money. And that speaks to how little depth I got into it on the first, hearing of it. It wasn't until later when I was in college with Michael Goldstein and Daniel Krawietz that they really orange-pilled me on the fact that there's only 21 million Bitcoin. It's all cryptographically secure. And then a light bulb went off for me, which is, hey, this is better than gold. Like gold is better than silver. I only stack silver because I'm a broke college student. But Bitcoin is definitely better than gold. And the other, I think, piece of the important puzzle for me was that it was open source. So growing up, I was like the nerd who was installing Linux on his parents' computer. I was listening to Richard Stallman lectures about why free and open source software is better than proprietary software. And so when I opened up the Bitcoin software, the node software, the wallet, Bitcoin Core, it had this aesthetic quality to it of this is definitely open source software. No corporate designer had any involvement in this at all. And there was certainly no product manager involved. It was all just engineers volunteering their time. And that's something that I could I intuitively sense right away that this is legit. Like, this is not some kind of stupid Ponzi marketing scheme or something like that. Like, there's real engineering, real thought behind this. And from there, my career transformed from accounting to software development, and then into product management. Most recently at Kraken, I was the product manager for Bitcoin and Lightning, and now research at Riot. Along the way, this is a kind of a starting at the end of 2012, and so now we're on 12 years. I've just been obsessed with Bitcoin and thinking about it every day, and maybe even tweeting about it every day, and if not writing longer form pieces. I've also done a tremendous amount of Bitcoin education with policymakers. So I've gotten to testify in the Texas Senate. I've gotten to be in lots of meetings with both people at the federal level and at the state level. And so it's just been a fascinating journey on the political side as well. So I think that the social media evolution is interesting. When I started writing longer form pieces about Bitcoin, I would post them on Reddit. Our Bitcoin was the center of attention. It was the Schelling point of communication. Although that's a contradiction in terms, because the whole thing about a Schelling point is that there is no communication happening. And I actually think this speaks to, the duality of social media for Bitcoin, which is that A, it doesn't matter at all, right? Like, go touch grass is not real life. And B, a lot of Bitcoin history has occurred on social media. So how to reconcile those 2 points, right? And you can make a Fukuyama type point of, well, history ended, in 2009. So it doesn't, social media history is kind of just humans doing things because they want to communicate, not because they're actually accomplishing anything, because Satoshi did all the accomplishing already, right? But something happened with the block size debate where basically any discussion of a hard fork was deemed to be altcoin, S-coining. And so the moderators, I think they went a little overboard, according to some, and started banning people, who were for the hard fork. And I think that disrupted the network effect sufficiently, in addition to the growth of Twitter at the time, that made it such that it shifted from Reddit to Twitter, the kind of the focus of Bitcoin. Sorry, the focus of Bitcoin social media, not the focus of Bitcoin. That would be, I'd get canceled for saying that, right? So, yeah, I think that, now there was a real push towards moving into Nostr because of what was going on with the censorship and COVID and all of this. But Elon's acquisition of Twitter and transformation into X, I think, has solidified that Bitcoin discourse is going to continue to be focused on Twitter. But, for the benefit of your audience, I'd say, hey, don't forget that in addition to Twitter, there's lots of other avenues of communication, including, like most of the Bitcoin core developers, they don't really communicate on Twitter. The only time they end up on Twitter is when there's some kind of pitchfork mob after them. Because they did or said something outside of Twitter that was wrong. So yeah, it's been really interesting. I think X will continue to have social media. I think Nostr will continue to grow, but something bad needs to happen to X to push people onto Nostr.
Yeah. Are you on Nostr? Are you posting frequently? I've not used it.
I'm on it. I don't post there frequently. I'd like to start. I always have this train of thought of, well, why don't I have a piece of software that posts on both, right? Like, why would it not duplicate it?
$1 million idea for any listeners there. Yeah. Yeah,
please.
So you mentioned about the block wars, and anyone that's not familiar, I was around at the time. There was this debate between increasing the block size to improve scalability, and then ultimately that led to Bitcoin Cash, and then Bitcoin Satoshi Vision somehow appeared from somewhere out of that as well. What was your view at the time? Did you think that blocks should increase, stay the same? I even saw arguments at the time of block size should decrease to kind of provide more incentive for miners by increasing fees, etc. So how did you feel about that at the time? And do you kind of still have the same opinion on that now?
So from the beginning of my understanding of Bitcoin, so like 2013, 2014, I had solidified my views that the 1 megabyte block size limit was fine. for a number of different reasons. One of the reasons, which I now reject this reason, I actually think this was a bad reason to support a good idea, which is that we need to artificially constrain the supply of block space to drive up transaction fees. And that's why we need to keep 1 megabyte. So I don't think that that's as good of a reason now, or I don't think that's a good reason at all in general, but because it gets the causality reversed. So I think that what we need to do is keep the cost of running a Bitcoin node low. And that when we do that, we need to set a resource usage constraint. And the one that makes sense is the block size limit, now the block weight limit. And the way that limit interfaces with the market is through essentially surge pricing, right? So if there's just too much demand, then we handle the denial of service attack by gouging on fees, driving up fees so that you're able to rate limit and prioritize economically rather than prioritize through some kind of political process or some kind of like crazy software engineering that, anyway. So that was a debate I had with Gavin Andreessen, who was the chief scientist at the Bitcoin Foundation back in 2014. We had this debate on IRC, which is like a little chat forum. The transcript is available online as well. I can send you a link to that. So I was opposed to a block size increase as a hard fork, especially if it was like a doubling or a quadrupling. Like if it was a 5% increase, then I think in terms of marginal economics, like that makes sense to me maybe. The SegWit soft fork was effectively a block size increase, right? In the sense that now you could have more transactions per block than you could historically, up to like twice as many. But that it would be very gradual based on adoption of SegWit, and it didn't imply that now there's going to be like one of these increases every 4 years or something like that. It didn't really set a precedent. So I think that I was supportive of SegWit, but very opposed to 2x part. Now, the developer for 2x, Jeff Garzik, he was a piece of work. I mean, still is. I mean, he's still in the industry somehow. Yeah. But I don't know. I'm not going to start getting into character assassination, but he did character suicide. And so when I think about like the history of protocol changes for Bitcoin, the block size I think is probably still the most misunderstood and most controversial one. I'm not opposed to future block size increases, by the way, and so that I'll throw that bomb out there, but it just has to be done in a way that is rational and that's not based on, if we get rid of the block size limit, then everybody will be able to use Bitcoin on chain and the price will go to the moon. Like that's not reasoning that works for me, even though it's persuasive for a lot of other people.
Yeah, well, I think you're probably one of the more interesting characters to ask in the space surrounding block size and transaction fees, etc., working with Riot, which is one of, if not the biggest US mining company. I should have maybe done a little bit of research. Yeah, right. Okay, yeah. One of. So I'm curious, especially post-halving, when we see the block reward decrease by 50%. We saw the first day ever where transaction fees surpassed the block reward for BTC in terms of miner revenue. Now, obviously, that was probably driven in part by ordinals and other nonsense going on chain. But do you see Bitcoin transitioning to more of a fee-based economy for miners as an incentive, in which case surely having more transactions per block or even increasing the block size where more transactions can get in would decrease miner revenue? So it seems like you're kind of arguing for Bitcoin, but maybe not arguing for miners in that regard.
Yeah, I mean, to be clear, my first interest is in looking at Bitcoin objectively. And so, Riot would not hire me if it was just about, trying to pump the, miner revenue. Like,
yeah.
First of all, I don't think anybody has that ability, right? So, the intellectual dishonesty wouldn't help in getting that accomplished. But you hear that argument made in lots of different contexts. So I've heard people say Riot should support this soft fork because it'll increase transaction fee revenue. And I think that what people miss with the mining industry from all sorts of different angles is the difficulty adjustment. And so when you think about a aggregate increase in revenue for the whole industry, what effect does that have on an individual miner? Well, for 2 weeks, it might mean that they make more profits. But assuming an efficient market, you have new mining rigs being deployed. You've just grown the size of the industry. You haven't increased anybody's profit margins. And so if from the shareholder perspective, okay, they're looking for increased profitability, and that the unit economics ultimately, the profitability will dictate how big the industry will get as well. But when we think about how do miners actually succeed, it's with strategies that don't take advantage of that aspect of it, of like trying to increase total revenue, but instead look at vertical integration of what are adjacent opportunities, right? So it might be like heat reuse for agriculture will be a way that we increase our profitability of Bitcoin mining, rather than let's find a soft fork to increase transaction fees on the Bitcoin side. I also think that transaction fees will continue to be volatile. And so we'll continue to see these temporary surges. And for a lot of Bitcoin miners, I actually think that kind of volatility keeps competition out. It scares people away. And then the miners who are really, solidly attached to the industry and constantly improving, they then catch those volatility spikes as days where they just have excess profitability. We see the mirror opposite in electricity markets. So some days the price of electricity is very low, and then other days for 1 hour it'll be extremely expensive, like 1,000 times more expensive. So on both ends of I think of Bitcoin mining as the intersection of three risk spaces. One is the Bitcoin price, the second is the difficulty, and the third is the transaction fees. Fourth. And then the fourth is the electricity. And you have volatility in all four of these markets at which you're at the intersection of as a Bitcoin miner. And it really is about developing a balance sheet and an operating strategy that allows you to survive in all four different seasons and continue to be, creating value for shareholders.
I'm really curious. You obviously mentioned the volatility in electricity prices, which is obviously going to be a big part of miners' strategies. But do miners take into account, of course, the price, but do they look at anything else to say, here's where we should be going aggressive, maybe trying to scale up hardware, putting more output, whatever? Or do you maybe say, maybe now's time to be a little risk off? Are there kind of more in-depth strategies at play? And if so, what kind of data points are you looking towards? You don't have to obviously reveal Riot's secrets here, but I'm interested to hear like how in-depth it really goes for miners.
Yeah, so I think that a lot of the opportunities, especially when we look at grid scale in Texas, it just depends on the context. So for example, our new facility, Corsicana, it in a way is very fortuitous that piece of land, which is directly adjacent to an electric power station, is on the market for sale. And that switch yard happens to have open connections, right? So that we don't need to build any other infrastructure on the grid side. That's really what slows down projects, because getting a substation added to the grid and cut into high voltage lines, that can take 3 to 5 years. And so you can't have a mining strategy that's based on, something getting done in 3 to 5 years. You have to find stranded assets that are already there but are underutilized, and plug into those. So, for example, in Rockdale, our first facility, it was an abandoned aluminum plant from Alcoa that they were tearing down. Aluminum takes up a massive amount of electricity. And so the electricity infrastructure was just there, available. And so it's really about finding opportunities like that so that you can not just get cheap electricity, but get it sooner, right? The go-to-market timing is critical because of the halvings, because of the amount of competition in the industry and the cost of capital.
Yeah, interesting to hear. And kind of on the flip side of the hardware and infrastructure side of things, obviously Bitcoin miners, like most people, prefer to make some money rather than lose a bit of money. So miners predominantly will make a lot of their earnings via selling their BTC that they've mined. Is there any strategy in terms of when you'll be selling more BTC and more aggressive, or times where you can say, right, I think we really need to hold on, cut profit margins slightly, because right now we're at a discounted BTC and holding on to higher prices probably makes more sense for future profits?
Yeah, I think that in general, not just for Riot, but for companies across the industry, they look at what do the shareholders want? Do the shareholders want the company to hold more BTC or not? And then how can they do it in a way that is, most beneficial for shareholders? And so if, during the bear market, if the equity markets are essentially closed, right, that there's just no appetite for more equity from Bitcoin miners, then Bitcoin miners have no choice but to sell their operation revenue or their stack, as we've seen in this past cycle. I mean, we saw companies have to sell all of their Bitcoin during the bear market because of their balance sheet. And it's obviously, as a Bitcoin maxi, that's not something I ever want to see. So I like companies that manage their risk and avoid being in that situation, including Riot, because then in the bull market, it means that the capital markets have opened up. There's lots of capital that wants to enter the industry, and there's only so many ways to deploy it. And so I think that currently it's definitely a situation where Bitcoin miners are able to accumulate Bitcoin on their balance sheet at a very low cost of capital that is beneficial for shareholders.
Great. And I know it's kind of looping back to kind of what we said before in terms of the block sizing, but I know you've been a bit of an outspoken advocate for the Lightning Network previously. Do you see that as another good solution to the Bitcoin scaling problem? I know, again, it's probably not going to be of a direct benefit to miners, but as a Bitcoin maxi speaking here, do you think it's going to work? Do you think it's going to succeed? Or do you think there's maybe a few hurdles we need to get across first?
So yeah, just, after thinking about Lightning for a very long time, because that's what I was working on at Kraken, I actually think that Lightning has been 100% effective already, and arguably too effective in the sense that now alternative approaches to scaling Bitcoin are very much sidelined in terms of developer attention and interest, because Lightning is really, really good. I mean, it's instant and there's zero fees. And so it's like, how do you get lower than that? How do you get faster than instant or lower than zero? So, that was my experience at Kraken was, okay, let's launch this. We'll have deposits and withdrawals that have zero fees and, instant. And instantly, we had thousands of people using it across the world overnight. And then I bet now, I don't have obviously internal metrics, but I bet it's tens of thousands at this point. And it instantly became number 2 to like Tron and Ethereum and stablecoins on those platforms. So I think that it is limited ultimately the constraint for Lightning adoption is volatility. So people think Bitcoin's too volatile, and I think that is the current bottleneck on the growth of Bitcoin payments, not the technology itself. But growth is happening despite the volatility. So I don't think that there's a technology out there that could come out and be like, hey, we're better than Lightning. Lightning is already accomplishing exactly what I wanted to see it doing, which was you open up Lightning channels when transaction fees are cheap. And then when on-chain fees are high, you can just keep sending payments over Lightning and it doesn't matter to you. And then the transaction fees go back down on-chain. And so those volatility spikes that we were talking about, you're able to hedge against those for your payment application by using Lightning. And I think that it accomplishes that perfectly. But people, on Twitter, people always complain about things.
Of course. Yeah, it's Twitter. What else are they going to do? So I guess kind of still on the same topic, of course, Bitcoin, peer-to-peer electronic currency. I think in the past year, maybe this is just personal opinion, which might be slightly controversial. The narrative might have slightly shifted, especially post ETF approval and institutions entering the space, where the narrative has maybe shifted from this currency where people maybe don't want to spend it anymore because obviously they don't want to spend a currency that can double, triple in value in a short space of time. And that plays into the volatility argument you had. But do you think that the narrative around Bitcoin has changed as well to more of this just store of value asset? Do you think at some point we'll come back to that peer-to-peer currency, or how do you kind of see that narrative and it changing going forward?
Yeah, so I think that first we have to acknowledge that this narrative dates back far further than Bitcoin, and that this is a debate that's been going on in monetary economics basically since written history began. You can find this debate in ancient Greece. So I think that ultimately what the promise of Bitcoin is that it cancels this debate. It says this debate's no longer allowed because even if you don't like who's holding the money and for how long they're holding it, you can't do anything about it. So that's what I love about Bitcoin, because I feel like this debate always ended up with, all right, well, we need to incentivize people to spend their money, so let's have some inflation. And the monetary system allowed for that, and for that political influence on itself. And now Bitcoin, for the first time in human history, because this was the case with gold and silver as well, right? Gold and silver, you can't just use it in commerce. You have to have it minted. The minting process is centralized. And so the mints would always get co-opted by the state. And so that's why you always had the king's face on the coin, right? It was a royal mint. And that if you tried opening up your own mint, his knights would be at your door, very soon, and shutting your business down. So the promise of Bitcoin to say, hey, look, like, it doesn't matter how many Keynesians are out there. If there's 500,000 Paul Krugmans, they still can't print more Bitcoin. If there's, 10 million Paul Krugmans, all they can do is create Krugman coin that has, a gajillion Krugman coins, but they can't change Bitcoin. So I think that canceling that debate is hugely valuable. And that we're seeing the results of that, right? It's what you're talking about, this narrative shift, right? That's the result of, well, what happens if you can't just take the money, or if you can't just dilute the money? What happens? What do people naturally do? And what people naturally do is that you'll see tremendous wealth inequality, right? So some people will hold a lot of Bitcoin. That's not me. When I found out about Bitcoin, I was a broke college student. I didn't have MicroStrategy or, any of these other companies. So, but you also have people who, they were very early and they were like mining 10,000 Bitcoin, or something. And we see our friend Pete Rizzo, the historian, he'll tweet out, hey, this early Bitcoin miner just sent Bitcoin to an exchange. And it's like, well, it's a relay race. So they are handing the baton to the next generation of holders. And they held that baton for a very long time. a lot of people, they hold the baton for one bull run, right? Like they'll hold it from 1 grand to 10 grand, and then they sell it because, hey, I 10x my money. Why shouldn't I take some profits, right? And so I do think that despite the wealth inequality, the reason why it's justified is that those people underwrote that volatility risk for that amount of time, and at that scale. And so I think that I don't think Saylor has enough competition right now. I'll say that. I think that it would be great to have decentralization by having more folks taking Saylor's approach and trying to buy all the Bitcoin.
I'm assuming you're quite bullish on what Saylor's doing and hoping for more and more institutional and potentially sovereign state adoption.
I am. I mean, this is something that I was theorizing back in 2013. So my first job was at Deloitte, auditing securitization deals, asset-backed securities. And that's what Saylor's doing. He's doing an asset-backed security, the most sophisticated and advanced set of asset-backed securities in the history of capital markets. And he's doing it, he's able to do it because the SEC says you can't buy, your balance sheet cannot be more than 40% some other security, right? So MicroStrategy couldn't buy couldn't put 41% of their balance sheet in Apple stock, right? But because Bitcoin's not a security, it's a commodity, you can put 99% of your balance sheet in Bitcoin. And that's not something that, so that's, you can call that a loophole, but obviously it's justified in the sense that they're fundamentally different assets. And so it makes sense that this would not be regulated in the same way. The second is that asset-backed securities, they usually have a lifespan, a life cycle where you're not constantly adding more capital to them. You create a new one when you have more capital. But what Saylor's doing is having kind of a continuous entity that he's able to add more capital to using the public equity markets, which are the most liquid markets in the world, by the way. So I think that he's putting together a lot of different parts of the puzzle. And then the other really critical one is the convertible bonds. So traditional asset-backed security will not do a convertible bond. They'll do a traditional bond. You saw these mortgage-backed securities that were AAA, very secure. So, but having a convertible bond, he avoids having to pay the interest, right? And so I think that this is, or the cash interest, I should say. He still pays the interest. This is fantastic in terms of finding a safe way to leverage up on Bitcoin. When we think about what's the safe amount of leverage on Bitcoin, I think that for somebody who's in Saylor's situation, right, because I don't think this is the case for everyone, you could look at the history of Bitcoin's price and say, all right, well, there's no way it's going back below $1,000 per Bitcoin. And there's somebody out there willing to underwrite that risk, right? To say, yeah, no, it's definitely never going below $1,000. And that's not something that you could say 10 years ago. 10 years ago, it would be like, yeah, it is below $1,000 right now, right? So that line, let's call it the AAA line, right? This is the line where people think it's never going to ever cross again, and they would definitely put money, on that. Is constantly rising to where in 10 years it'll be like, oh yeah, Bitcoin's never going below $100,000 again. That's definitely not going to happen. Which means that amount of collateral you can borrow against at AAA rates, right? So the amount of Bitcoin as collateral that you can underwrite at AAA rates is increasing every day. And same for the amount at BBB or CCC or at unrated convertible bond levels, right? So the amount of capital that Saylor and the Bitcoin economy have that they can borrow against in a way that they won't get liquidated during the bear market. I think that's the biggest challenge with leverage, right? Are you going to get nuked when Bitcoin has a liquidity, cascading liquidations on not BitMEX anymore. I don't know where the DGen 100x traders are, but
yeah,
you want to protect yourself against that, and that's what these new securities enable you to do.
Yeah, I would say please don't anyone just blindly follow this convertible debt into Bitcoin strategy. Don't start buying Bitcoin on credit cards. But if you had to have a rough AAA Bitcoin will never go below X figure in your head, do you have one in mind, or do you not want to say?
I mean, I'd have to do a data-driven approach, right? Ultimately, it's an actuarial question for people who work in risk management, because AAA is a technical definition, right? Saying the probability of capital loss is less than X percentage. And so it might be like, let's say 1%, right? So then you have to ask yourself, okay, what's that historically, what would be that level for Bitcoin, assuming different assumptions? But that also is very conservative because it's not assuming future growth of Bitcoin, right? So when Saylor's talking about like 40% average annualized growth, that's basically the capital base that is growing, at that AAA level too.
Yeah. So just quickly, you were mentioning before BitMEX and that liquidation cascade we got when they had to like turn the exchange off in was it the COVID 2020 crash when it was just absolutely
March 12th, 2020.
Yeah, I woke up that morning so much poorer than the day before. It was I think a sad day for everyone. But do you feel, because I mean, I'd only been in the space 3 years at that point, whereas obviously you'd been in a lot longer. So for me, there was that kind of, wow, I wonder if like maybe this is it. Whereas now, obviously, I've been through another full cycle, so I kind of understand that we've probably crossed that point of no return for Bitcoin, where this thing's here to stay. Was there a point where that happened for you as well, where it was probably a lot earlier than then, but where you thought, oh, this isn't just a fad, this is something that's really going to change finance?
Yeah, I mean, I think I had that point up front, and then I have been, when my now wife, girlfriend at the time, Morgan, I told her, Bitcoin's going to replace the dollar next year. So I told her this in 2013.
Yeah.
So I've been very wrong on the timing of it, but it is definitely transforming finance. And, it just speaks to the fact that you can get enough right. Like, you don't have to be right about everything. That's what I've come to the conclusion to in life, is like, as long as you're right about the important things, then how long it takes, that's a fine problem or it's fine to be wrong about, because that just means we get to enjoy it for longer.
100%, yeah.
The friends we make along the way.
Do you think this cycle feels different at all? I guess for me, 2017 was like the retail driven cycle, and then the previous cycle was exchanges coming in and FTX buying stadiums and all this. Whereas now it's not just like one or two institutions, it's there really might be this rush of many of the world's biggest companies trying to put Bitcoin on the balance sheet, and countries like El Salvador, which I know were accumulating last cycle, but now there's rumors that other nations are starting to accumulate BTC, and the US potentially putting a strategic reserve of Bitcoin, of 1 million Bitcoin. Does this cycle feel different than previous cycles, or is it just always kind of grown in a not predictable way, but it's always just grown like that?
Yeah, it definitely feels very different. So I think that among Bitcoiners, there's like two camps. There's the camp that Bitcoin is for the apocalypse, right? It's for us to be ready. It's Noah's Ark, and that the fiat economy is going to collapse, right? And in hyperinflation, and that so I think that the previous cycle was basically that ideology, right? Because of the COVID inflation. Okay, now Bitcoin's the inflation hedge. And then the problem was that the Federal Reserve raised interest rates because they're like, yeah, we don't like inflation either. And so that put a damper on that cycle. This cycle, it looks like they might actually be cutting interest rates. And it doesn't look like they're going to be raising them. And so I think that is a positive tailwind. The second is the regulatory environment. So the Biden administration implemented a all-of-government assault on the industry for 4 years. They did everything they could to try to stop the growth of Bitcoin in the United States. They were very constrained by the lack of support among moderate Democrats for their agenda in Congress. And so they were not able to pass any serious legislation. But they proposed, so Elizabeth Warren proposed legislation that would have banned Bitcoin nodes and Bitcoin wallets and Bitcoin mining, right? Like that was the DAMLA Act. She found a Republican co-sponsor. After Trump got elected, the co-sponsor removed his co-sponsorship. He was like, I don't want to be associated with this, because there has been a complete sea change. Trump is 100% orange pilled, and he's out there orange pilling other people now. You might, hear stories about that. And so in that environment, I think that it's completely different, because now there's not this threat of capital controls, of debanking from the fiat system, while we are engaged in the largest scale speculative attack in the history of humanity, which is that, hey, let's tap into the bond market to borrow as many dollars as possible to buy Bitcoin. And that is, this is a term that was coined by Paul Krugman. Now, he meant it as like he wanted to have a negative slur for it, right? Speculative attack. So it sounds really bad, but it's actually really good. He, famously, this was done by George Soros against the British pound. And so you borrow the weak currency, and you sell it, and you buy the strong currency with it. You're short selling a weak currency, and then you're repaying the debt by using the strong currency that has appreciated in value. And so it's a self-reinforcing cycle. And it's what we're seeing happen with these convertible bonds at scale. And so now, with the Trump administration, not only do we have access to the bond market, I think within the next year, we will have access to the commercial banking system. And so you'll be able to go to JP Morgan Chase, send them a lightning payment of $500 worth of Bitcoin, and borrow $50 of Bitcoin, or $50 from it, right? And do that instantly, right? So, like, we're heading towards this world where if you want to buy a house, you'll say, all right, I'm going to put up, 10 Bitcoin, and you're going to give me a mortgage for this house, and it's secured by both. And so I don't have to put any money down, and, it's AAA credit. So I think that that's the world we're heading towards, where we might also get a removal of the capital gains tax on Bitcoin. I mean, that would be fantastic in terms of getting a circular economy going. But yeah, that's I think the future is much brighter, and I think that means this cycle could be the last cycle, right? That there is this point of no return, or this event horizon, where because of how much value Bitcoin is accruing and how much adoption it's getting, eventually people just want to abandon the dollar, and it's worthless because everybody's using Bitcoin. I hope that's what we're heading towards, but we'll see if this is the final cycle or not.
You've kind of answered my question there of where are we in the cycle. Do you still think there is going to be a 4-year cycle? Because historically we've seen that, whether it aligns with the global liquidity or the halving events, kind of up for debate. But comparing to previous cycles, which would kind of indicate we have about a year left, obviously with the regulatory environment and things like MicroStrategy and what they're doing in the bond market and stuff, things are changing a little bit. Like you said, this could be the last Bitcoin market. Is that meaning hyper Bitcoinization to some extent, where we see a never-ending bull cycle?
That's correct. Yeah. Now, I also I agree with your point about now with the halvings being a less and less smaller percentage of the supply, why have a 4-year cycle, right? And I'd say, the strongest argument for it would be human psychology, that humans haven't changed. The supply, that was all known, right? Like it was already priced in, and so it was all just human psychology the whole time. and it wasn't the halving. But we'll see. Only time will tell.
Yeah, that's what I try and say. Obviously, we mainly focus on on-chain data here, but I've always just said it's just mass psychology quantified. There's very predictable patterns in human behavior, and investors seem to do the same thing most cycles. But I guess if the supply and demand economics of Bitcoin are changing to the point where demand's almost ever increasing and supply is almost ever decreasing, then obviously that massively favors infinite price increase. So I was curious, in that case, are you still accumulating BTC? I don't know if you get paid in BTC or dollars, or do you have a thesis of just accumulate as much as possible? How do you go about that?
Yeah, it's I find the challenge is about the spending side of spending money is time consuming and exhausting from an energy perspective, and that I'd much rather rent a Lambo at the racetrack for a day than to buy a Lambo and have it in my garage and have to do maintenance on it. So I feel like, yeah, I'm accumulating Bitcoin. I'm going to continue to accumulate Bitcoin. I always get new inspiration from lots of different avenues for, hey, the fight is not over, right? Like, I'm not. If there's other ways to get rich, right? Like going to Silicon Valley, working at a startup, getting startup equity. Arguably, easier way to get rich than to, and I've seen lots of people do that. To go fiat mining and do that. And so I think that there's also the mission behind it of, I've always wanted to end central banking. Like I love that aspect of it. And if buying more Bitcoin today means I help contribute to that, then I'm voting with my money. Yeah, that's kind of the way I see it nowadays.
Do you have any kind of data that you look at or do any type of analysis to say maybe now is a good time to rotate into other hard assets? I mean, if the cycle's now, this is the last cycle, the up only cycle, then I guess that point's kind of mute. But there's always going to be times like we were talking about with human psychology where we have these boom and bust to some extent. And do you look at any data to say, yeah, now's a good time to put my 10 BTC into JP Morgan Chase for my new Bitcoin mortgage?
Yeah, I mean, the problem with that is that then you lose out on the fundamental properties of Bitcoin. So, you're missing out on the seizure resistance. You're missing out on being able to verify that you have the Bitcoin using your own node, and that means that you don't sleep as soundly at night. And so, it's not the same when your Bitcoin are with another man or woman. It's so. I think that that's probably the number one argument for not trying to time the market is, what are you going to put your money in? It's just not going to be as secure as Bitcoin.
So would that be your advice for new investors entering the market? Let's say Joe Bloggs, it's the first time he's ever heard of Bitcoin. He's watching this. What would be your advice for new market participants coming in?
Yeah, go to river.com. Go to bitcoincore.org and go to Cold Card and buy your Bitcoin, run your node, get your hardware wallet, set up a multi-sig, and start stacking sats. I think that's the best approach currently.
Have you always been solely Bitcoin? I know I'm work for a Bitcoin company, you work for a Bitcoin company. We may be a little biased here, but is there any alternatives? Do you ever look at any other cryptocurrencies with interest?
Yeah, so back in the day in 2013, this guy came into our meetup and said, hey, Bitcoin is for boomers. The Zoomers are using Litecoin. Check out Litecoin. It's faster than Bitcoin. So I thought, well, okay, I don't have any attachment to Bitcoin. This is like when I first heard about cryptos. So I start researching Litecoin, and I'm like, oh, okay, so it's faster, but you get the same amount of finality per unit of time anyway. So it's it's kind of silly because it's not the silver to Bitcoin's gold, because Bitcoin's divisible into 100 million satoshis. So that argument doesn't really hold water in this context. And it's both are dematerialized, so they've got the same material properties. And I came away with, okay, this Litecoin guy, he's an idiot. He has fallen for stupid arguments, and now he's sharing them with other people. And so that was my first introduction to altcoins. And it's been downhill since then, right? It's only gotten worse to where now if somebody's like starts talking about some altcoin, like I hang up, I block them on Twitter. Like there's only so much time during the day to deal with these arguments. What I try to do, instead of trying to like debunk them one at a time or something like that, I try to focus on the positive properties of Bitcoin and try to keep it positive like 80% of the time. And then 20% of the time, kind of make fun of the altcoiners. But it's really, I think that you get more success with honey than with vinegar, right?
Yeah, I'd say my argument is always find an altcoin that's outperformed versus BTC on a multi-cycle basis, and then come back and tell me anything that's better than Bitcoin. All you have to do is look at Ethereum, which has had diminishing returns each cycle versus BTC, to see that there's really no contest here.
I agree.
So to round it off, I don't want to keep you too long. Do you have any kind of, I mean, it's always hard to say, but do you have a figure in your head, either in terms of market cap, raw US dollar value, of where you could see Bitcoin going this cycle? Everyone always loves to hear it.
Yeah, I mean, I think the target now, the milestone is $1 million, right? I think we can already check off $100,000. This might be like famous last words of, yeah, that was the top of the cycle when Pierre said we checked off 100,000 and it was 96,000. But I think that's still the beginning of the bull market. So because Bitcoin's volatile, so I'd say the range is between like 300,000 and 3 million. That's the range of outcomes for the top because of Bitcoin's volatility. Assuming this is not the last cycle.
Assuming this is not the last cycle. Okay, great. Well, I don't want to keep you too much longer. It's been great chatting to you. And
hey, thanks, Matt.
Yeah, thank you very much for coming out. Hopefully we can meet up again in person soon. And I look forward to more chats with you.
Yeah, see you soon. Bye. Have a good one.
Thanks for that. Cheers. Thanks everyone for watching. Bye-bye.